Hey everyone, this is Kirk again here at Option Alpha. It is Monday, February 7th. Of course, congratulations to the Packers. Great Super Bowl. Thought the halftime show was a little bit stupid, really, but hey, that's what you get, I guess, with the biggest game of the year. So, okay, so it's Monday. We're gonna try to start off this week just trying to go through some things, point some things out I kind of noted over the weekend and kind of looked into the markets a little bit deeper. I think what I want to talk about most on this video is sector weighting in the S&P. Most of the thing that or the couple areas I think have been driving the market higher have obviously been technology, consumer discretionary spending, which has continuously been up, and then energy. I think those three things have really driven the market higher. Now, I think it's going to be interesting at the end of this video. I'm going to show you the financial sector hasn't really experienced the recent growth that have the technology, consumers, discretionary, and energy. So I think market's way too top heavy right now. I think every of some sort, but we all know that the market can continue on in this fashion longer than we think. But I think that its run over the last it's going on 6 months almost now is really going to start to weigh on stocks. You just can't price in that much expectation in one straight full swoop. So, okay, so we are going to look at a couple things here on the charts. This is the XLK. This is the technology spider funds here. Again, I think it's just pretty interesting that this thing has just really kind of taken off here as you got out of October and November. Clean break above recent resistance, bounced off of that same level, and you can see here on the charts that you also got a buy signal at that level before. So again, these indicators that I use at least work in both areas. They work on markets that are heading higher as confirmation that this is a good buy point before the market heads higher. As you can see down here, RSI was just bottoming out and had turned higher on that same day. So very good buy signal, but right now you can see that the market still remains to be way overbought. It is continuing higher, but it is overbought. So there's no reason to take a long position at this point because you're just going to be chasing what minimal returns are left. And again, if you look back on Friday and you kind of see what happens, one day can really take out 4 or 5 days worth of profits. So you just want to be careful if you are going to be on the long side and keep your stops tight. Okay, this is the XLY. This is the Consumer Discretionary Fund. I think the same thing that you see on the technology sector, almost exactly the same thing. This one hasn't had as much upside potential, and I guess you can say that it didn't have as much upside because it didn't really give us a clear buy signal here back in late or mid-November here. You can see that both RSI and stochastics, which I use almost all the time, had a little dip back down to the support range after it broke out of this high, had a dip back down, but you can see that the buy signal wasn't as good. It was called a phantom buy signal, so it was in between these two red lines here, these two extreme points. And that's why I don't think that you've seen the consumer discretionary ETF really take a run up as the other ones have. Also, you can see that MACD RSI and stochastics have already clearly been trading inside this range. So it's been kind of a sideways trade right now, but it is up and is helping to push the rest of the market higher. All right, then the last thing we're going to look at for these ones is the energy sector. The energy sector obviously has had a pretty huge boost from all of the news coming out of Egypt in that area. So this one's a little bit skewed on this end of the chart, but again, you can see the same theme start to evolve. The market is clearly very overbought. There's a lot of things that could go wrong very quickly for energy. So although everyone kind of thinks that oil's heading straight up, we all know that if demand starts to fall off and if we start to see some bad news start to slowly come out, we could definitely see a very quick reaction in oil and energy to the downside. So just keep that in mind as you're trading. Again, we've had almost 4 months here now of overbought technicals. Again, it doesn't mean it can't continue higher from here, but it just begs the question, how high can it go from here? It's just a continuous moonshot at this point. Okay, the last thing I want to look at on this video is the XLF. I think this is pretty interesting here. You can see it's really in its infant stages, and unlike all of the other charts that we've looked at here, these sectors, the technology, consumer discretionary, and energy, which have broken out of this April range, and they broke out of it early in October, November. You can see that financials have really lagged here and are really continuing to lag. Now, I will say that it is out of this kind of tight box and trading range right down here right now, that it seemed to be stuck in for the better part of 6 months, but it's now slowly starting to break out of this. But now that we're getting up towards resistance, again, you can see that the indicators are starting to diverge. You can see RSI and stochastics have already started to move lower. As the market moves higher, which is a bearish divergence signal, there's less momentum in the stock, even though it's continuing higher, so it's kind of floating up on no weight. So this is something I think is interesting. The financials are a big part of the S&P, so you have not only the other three sectors that we covered carrying the S&P higher because they make up a big majority of the S&P just by themselves, but you have financials, which is still a big sector of the S&P weighting, which hasn't really gotten off the ground yet. So who knows what this means? It could mean that the market is, as soon as it starts to pull back, financials pull back hard, the rest of them pull back hard, we get a good correction. Or the other sectors pull back, but financials continue higher. It's kind of a muted correction and the market trades sideways. As always, I hope you guys enjoy this video and have a great